All right, so diving in today, we've got a really interesting one, Snap Inc. That's, of course, the company behind Snapchat. And you guys have given us a ton to go through, this whole, what we're calling it, this Snap Deep research analysis. But the goal here is, like always, to kind of cut through all that and find the most important stuff. What really matters
Hmm,
about Snap's business? How are they doing? Where are they going? That's what we're aiming for today.
exactly. And I think the best way to tackle this is in two parts. We're going to first really get into the nitty-gritty of Snap itself, their business model, how well their management team is doing, and of course, their financials. Then in part two, we'll kind of zoom out a bit, look at market sentiment, the ownership structure of the company, and of course, we have to talk about the risks involved too. Keep in mind, you might see stock recommendations elsewhere, but we're not about that. We're all about giving you a clear understanding of the fundamentals.
Absolutely. And just a little teaser, we're going to be talking about how Snap is really using augmented reality in a unique way. And surprisingly, their subscription service is doing pretty well.
Hmm.
So that's all coming up. But first, let's break down what Snap Inc. actually does, right?
Yeah, so at the most basic level, they operate a camera-centric social media platform, Snapchat being the big one. And what I find fascinating is their emphasis on being a camera company, which really highlights this centrality of visual communication to their entire identity. And, importantly, augmented reality is a huge part of that.
Right. So it's bigger than just those disappearing snaps or stories. It's a whole ecosystem built around how people interact visually. And speaking of, when we look at how they make money, it's pretty much all advertising. Like 96 to 99% of their income comes from ads.
Exactly right. And they've got a few key formats for these ads. You've got your standard Snap ads, the ones that are designed to blend in with the user-generated content. Then there's sponsored lenses. These are those interactive augmented reality experiences that brands can actually create. And then, of course, you have your sponsored filters, which are those, simpler visual overlays that people use. So with such a huge chunk of their revenue tied to advertising, that means their financial success is really linked to the overall health of the advertising market itself.
But, they are starting to branch out a little. That Snapchat Plus subscription service with its exclusive features, that's seen some pretty impressive growth, actually. I mean, 131% increase year over year in 2024. That's pretty significant, wouldn't you say?
Absolutely. It's more than just a big number. It's a crucial shift for Snap. Because, for years they've been so dependent on the ad market, which can be very unpredictable. But this subscription growth, this gives them something that's more predictable, a recurring revenue stream. Potentially makes them less vulnerable to, say, economic downturns. And it shows that people are willing to pay for those extra features. And that means deeper engagement, more loyalty, something that advertisers are always looking for. Beyond the subscriptions, they've also got their hardware ventures, like their augmented reality glasses, spectacles. Those contribute to the diversification, but, on a much smaller scale for now.
Right. So let's talk about the Snapchat app itself. It's more than just disappearing messages, isn't it? I mean, you've got your snaps, your stories, chat, obviously. But then there's Discover for curated content, Spotlight for those short videos. It's like their version of TikTok, basically. And, of course, Snap Map for location sharing. But you mentioned it earlier, augmented reality, those lenses and filters. That seems to be like a core part of their identity.
Oh, without a doubt. It's fundamental to their strategy. And what's interesting is that they're not just using AR to keep users engaged, making those selfies and interactions more fun. It's also become a really significant and increasingly innovative way for brands to advertise. Those sponsored lenses we talked about are the perfect example of that. They hit both those goals. And if you look at Snapchat plus Snack, those premium features like custom app icons, seeing who rewatched your stories, and even getting your replies prioritized, all those things are designed to give their most dedicated users an even better experience.
Yeah, I can see the appeal. And in terms of, how many people are actually using this thing, they're at 453 million daily active users. That's at the end of 2024.
Yeah.
A 9% increase year over year, plus over 850 million monthly active users. Those are some pretty solid numbers.
Oh, they are. Definitely substantial. And the bigger picture here is that they've got a really strong presence among Gen Z and younger millennials. That's a demographic that a lot of advertisers are, frankly, desperate to reach. But, it's worth pointing out that this growth in daily active users, it's not the same everywhere. In North America and Europe, it's been pretty stagnant compared to the rest of the world. So that might indicate they're hitting a bit of a ceiling in those more mature markets.
So then, what is it about Snapchat that's drawing people in? Why are they choosing this over all the other social media platforms out there.
It seems like it's about that feeling of authenticity, that you can be yourself and that focus on, what's happening right now. Yeah, you're spot on. Their whole value proposition is built on that idea of living in the moment, discovering new things, and connecting with people in a fun way. And the fact that content disappears, it's ephemeral, that actually adds to that. It creates a sense of spontaneity.
Hmm.
Less pressure to have everything be perfect and polished like on some platforms. And of course, their commitment to augmented reality from the very beginning, that's a big differentiator. Those lenses and filters, they're about making those online interactions feel more genuine.
So just to recap, the core business here is a visual communication, AR-focused social media platform, primarily driven by advertising, but with those subscriptions and hardware starting to contribute more and more. Now, let's zoom out a bit. Talk about the industry as a whole. Social media is massive, right? And it's still growing.
Oh, absolutely. And the projections are huge. We're talking $276.7 billion in ad spending just in 2025. And the number of users worldwide is expected to reach, get this, 5.42 billion. And the interesting thing here is that a lot of Snap's strengths really align with the biggest trends we're seeing in social media. Short-form video is king right now, which is where Spotlight comes in. They're way ahead of the curve in AR advertising. And even social commerce, which is still emerging, that presents a real opportunity for them down the road.
But they're not alone in this space, are they? I mean, you've got Meta, TikTok, YouTube, Pinterest, X. The competition's got to be fierce.
It is. And to put things in perspective, compared to those giants, Snap's market share is actually relatively small. And then there's the whole situation with TikTok and the regulatory uncertainty around it, especially in the US. That adds another layer of complexity. It could mean shifts in user behavior, changes in where ad dollars are going, and that creates both opportunities and, even more intense competition for Snap and everyone else.
And it's not just about fighting for users and ad revenue, is it? I mean, the whole regulatory environment for social media companies, that seems to be getting more complicated by the day.
Oh, definitely. And this is a big question mark for Snap and for their operational costs. You've got data privacy regulations, GDPR in Europe, CCPA in California. They've got to comply with all that. Then there's scrutiny of their advertising practices with agencies like the FPC getting involved. And of course, content moderation is a huge issue, dealing with hate speech, misinformation, all that. And we can't forget about child safety online, which is becoming a major focus. Potential regulations like COPIA 2.0 and KOSA, those could have a big impact on how Snap interacts with their younger users. So keeping up with this ever-changing regulatory landscape, that adds a lot of cost and complexity to their operations.
When you put it like that, it makes you realize how hard it would be to break into this market today. I mean, those network effects we talk about, that's got to be a huge barrier for any new company trying to get a foothold. For anyone who doesn't know, a key concept in social media is network effects. This just means the more people that are on a platform, the more valuable it becomes for everyone. It's like having a phone. Not much use if nobody else has one. And for Snap, those features like Snap Map and Bitmoji, those really make those network effects even stronger.
Oh, absolutely. They really leverage that. And that's a big advantage for established platforms like Snap. Each new user adds value to the platform as a whole. But if you're a new company trying to pull people away from the giants, that takes massive investment, not just to get users, but to build and maintain the whole infrastructure behind the platform. And let's face it, Snap's got that brand recognition. They've built up user loyalty. That makes it even harder for newcomers to compete.
So when you break it all down, what are Snap's biggest advantages in this incredibly competitive market?
A few things stand out. Their brand is strong, especially with that younger demographic. That's gold. And the features they offer, disappearing messages, those AR lenses, those have become really integral to the Snapchat experience. Competitors can't just copy that easily. And they've been good at building partnerships with brands, with content creators. That just makes their whole ecosystem more attractive.
And as they grow, they must be benefiting from economies of scale, being a digital platform and all.
To some extent, yeah. As their user base grows, the cost of serving each additional user, that tends to go down. And like we mentioned before, the growth of Snapchat plus Berry, that offers a higher profit margin. But it's important to remember they still have big expenses, research and development to keep innovating, and content moderation to make sure the platform is safe.
And those network effects keep coming into play. More users, more value. You pointed out Snap Map and Bitmoji as features that really amplify that.
Exactly. Those features get more useful, more appealing as more people use them. Snap Map is better when more of your friends are on it. Bitmoji, those personalized stickers, they enhance communication within that existing network.
And while technically it's easy enough to switch to another app, there's got to be some stickiness, right? Those established connections, the history of all those chats and stories, even though they disappear.
There's definitely some inertia there, yeah.
Yeah.
It's mainly driven by those existing social connections. Even if the content itself is temporary, the relationships people build on the platform, that creates some resistance to leaving completely. But at the end of the day, Snap's best bet for keeping users is to keep innovating and to make sure those network effects are strong.
So last question on this. What are the truly unique assets that Snap brings to the table?
Well, their expertise in augmented reality, that's huge. They've been investing in it for years, and that's something that sets them apart. They've also developed proprietary algorithms for ad targeting, content delivery, things that are very difficult for others to replicate quickly. And then, of course, they have that massive user base, those engaged Gen Z and millennials. That's incredibly valuable to advertisers.
Okay, so let's shift gears now and talk about the people running this show,
Yeah.
the management team. Evan Spiegel, he's been the CEO since 2011. What's the overall assessment of his leadership, based on what we know, of course?
Well, under his watch, they've seen substantial revenue growth. And those diversification efforts we talked about, those have been happening under his leadership. He's taken the company from a relatively small app to a publicly traded entity with a global presence. But the big question mark, the one that keeps coming up, is profitability. They haven't been able to consistently turn a profit throughout his tenure.
Yeah, and they've definitely had their share of bumps in the road. Data security breaches, controversies like the speed filter issue, and the constant battle to keep harmful content off the platform.
Right. And how they've reacted to those situations is important. Removing the speed filter, that was a direct response to safety concerns. They've also put resources into tackling drug-related content and child sexual abuse material. They've invested in teams and technologies focused on trust and safety. So that shows they understand the responsibility that comes with running a big social media platform. But, the effectiveness of those efforts is still being evaluated.
Now, have they been transparent about all this? In their communication with investors, I mean?
Generally, yes. They seem to be pretty transparent. They release regular financial reports, give detailed breakdowns of their performance. Evan Spiegel, the CEO, he participates in earnings calls, investor conferences. He's out there giving his perspective on the company's strategy, answering questions. And that level of engagement is helpful for keeping investors in the loop.
But there have been questions raised about, the ethical side of things. Those old emails from Spiegel and the scrutiny they're facing over platform safety, that kind of stuff.
Yeah, and that raises a valid point about their ethical reputation. Those past communications, they definitely raised eyebrows. And the ongoing legal battles, the regulatory scrutiny regarding platform safety and content moderation, those are issues that affect how people view them ethically. They do have a supplier code of conduct that emphasizes ethical practices. But those past incidents and the current challenges, those mean they need to keep working to build and maintain public trust.
So to sum up, the management team under Spiegel, they've shown they can grow revenue and drive innovation. But the question of consistent profitability, that's still hanging over them. And they need to prove they can create long-term value for shareholders while addressing those ethical concerns from the past. Okay, let's move on to the numbers, the financial health of the company. We've got a lot of metrics to go through here.
We do. Let's start with a snapshot. As of March 26, 2025, their market cap was about $16.34 billion. Now, their price-earnings ratio, this is interesting. We've got two different figures here, one negative and one pretty high. The fact that we have two PE ratios, one negative and one quite high, both point to the same underlying issue: inconsistent profitability. A negative PE means the company has had net losses recently, while a very high positive PE suggests investors are willing to pay a premium for each dollar of earnings, often because those earnings are small or volatile. This inconsistency is a key area to watch. But their revenue growth, that's strong, 14% year over year for the fourth quarter of 2024 and 16% for the full fiscal year.
Their gross profit margin looks good too, somewhere between 54 and 57%. But their operating margin for 2024, that was negative. The good news is we did see a positive net profit margin in Q4 of 2024. That's got to be a good sign, right?
It is. That's definitely something to highlight. Now, their debt-to-equity ratio, there's some variation in how that's reported, but overall it indicates they've got a lot of leverage. A high debt-to-equity ratio basically means they're relying more on borrowed money than on equity, something investors keep a close eye on because it's a measure of risk. The plus side is they generated $219 million in free cash flow for all of 2024, and their price-to-book value is around 6.49.
So the key takeaways here seem to be strong revenue growth, good gross profit margin, but that ongoing struggle to consistently make a profit, though that positive Q4 is encouraging. They've got a lot of debt, but at least that free cash flow is positive. All right, let's dig into their financial stability as a whole. Sounds like they've got a history of losing money.
Yeah, that's right. They haven't been able to consistently turn a profit over the past 5 to 10 years, Q4 of 2024 being a recent exception. And that highlights how volatile their earnings can be. As a growth-focused company, they don't pay dividends right now, so there's no track record of dividend stability to look at.
What about their debt situation? It seems like they're actively trying to manage it.
They are. Even though they have a lot of debt, they've been taking steps to manage it, issuing new senior notes, buying back convertible notes, that kind of thing. And S&P Global Ratings, they've given them a B+ credit rating with a stable outlook. So they expect Snap's leverage to gradually improve over time.
And how are they doing with managing their working capital, for their day-to-day operations?
Their working capital efficiency seems pretty stable. They've maintained an average net working capital of about $275.9 million over the past 5 years, with $348 million in 2024. And their current ratio, that's at 3.95, that's a good number. It indicates they've got enough short-term liquidity to meet their obligations.
All right, so that wraps up our initial look at Snap's business, management, and financials. When we come back, we'll dive into market sentiment, ownership structure, and the risks they're facing. Stay tuned.
Looking forward to it.
Welcome back to the Deep Dive. We're now in the second half of our deep dive into Snap Inc. And we're kicking things off with market sentiment. So what's the overall feeling about this stock right now?
It's a bit of a mixed bag, to be honest. They've got a lot of potential for growth, but they've also got that history of inconsistent profitability. So analyst sentiment is kind of all over the place. You'll see ratings from hold to buy, depending on who you ask. When they have a good earnings report, sentiment gets a boost, but those concerns about sustained profitability, those are always lingering in the background.
And when we look at the price targets for 2025, there's quite a range of opinions there, too.
Oh, yeah. It's a wide spread. The average price targets for 2025 go from around $13 all the way up to almost $30. And if you look at individual analysts, some are saying as low as $9, others as high as almost $17. What's interesting is that some analysts have recently lowered their targets. They're worried about Snap's investments in things like AI because that could push back their timeline for becoming consistently profitable.
So it sounds like recent news has definitely been moving the stock price around. We saw that jump after the Q4 earnings, but then it dropped again.
Exactly. The market liked those earnings numbers at first, but then there was some concern about their future guidance and those AI investments they're planning. And then on the other hand, you've got things like positive news about strategic partnerships. That can give the stock a boost. But then news of executives selling their shares, that can sometimes push the price down.
Now, what about the short interest in the stock? For anyone who's not familiar, float is the number of shares available for trading on the open market. Short interest as a percentage of that float, that can tell you how much skepticism there is among investors about the company's near-term performance. So what's the story with Snap's short interest?
Right now, it's around 5.98% of the float. So that suggests a moderate level of skepticism, I'd say. If you look at the put-call ratio, some sources indicate a slightly bullish sentiment, meaning more investors are betting on the price going up than down. We're also seeing higher implied volatility in the options market. That usually means the market expects some big price swings in the near future.
Okay, let's talk about who actually owns Snap. It looks like institutional investors have a pretty big chunk of the company.
Oh, they do. The numbers vary a little depending on where you look, but generally, institutional investors own somewhere between 20 and 57% of the outstanding shares. Some of the biggest names are in there too: Fidelity, Vanguard Group, Capital World investors. That level of institutional ownership is important because it means those professional money managers have a lot of skin in the game. And their actions, their sentiment, that can influence market stability and how the stock trades.
And what about the company insiders? Do the co-founders still own a significant portion?
Yeah, insider ownership is definitely concentrated, especially with the two co-founders, Evan Spiegel and Bobby Murphy. They not only own a lot of shares, but they also have a lot of voting power within the company. And we've seen reports of them selling some of their shares recently, like we talked about before, that can sometimes be seen as a signal to the market, how insiders view the company's prospects.
So it sounds like overall ownership is pretty concentrated, a few big players holding most of the cards. And we even saw that Tencent has a minority stake. What are some of the pros and cons of that kind of concentrated ownership?
Well, one of the good things is that it can lead to more stable voting control. And it can make strategic decision-making easier. Large long-term stakeholders tend to be more invested in the company's success over the long haul. On the flip side, it can mean that smaller shareholders, the ones who are more spread out, they have less say in important decisions. And in Snap's case, they have that dual-class share structure that gives the co-founders majority voting control, which amplifies that dynamic even more.
Speaking of which, what's the corporate governance framework like at Snap? I know they have a board of directors.
Yeah, and it's made up of a mix of independent members and executives from the company. They also have these corporate governance guidelines that emphasize ethical conduct and representing the interests of long-term shareholders. But that dual-class share structure is still a key factor. Even with those guidelines in place, the co-founders having so much voting power that ultimately limits how much influence other shareholders have.
Okay, let's move on to risk assessment. We got a SWOT analysis here that really sums up a lot of what we've been talking about. So let's go through it, starting with the strengths.
All right, so on the strength side, their brand recognition, especially with Gen Z and millennials, that's huge. And their leadership in augmented reality, that's a major differentiator. They've got a large engaged user base, they offer innovative features, and importantly, they're generating positive free cash flow. And let's not forget the growth of their Snapchat Plus subscription service and their proactive approach to managing their debt. Those are strengths too.
And what about weaknesses? What are the things that could hold them back?
Well, the biggest one is that lack of consistent profitability. They're very reliant on advertising revenue. And while their user base is large, it's still smaller than some of their main competitors. And those past ethical controversies, those could still hurt their reputation. They've also got a lot of debt, and it's relatively easy for users to switch to competing platforms. Those are all weaknesses.
Now let's switch to a more positive note. What opportunities are out there for Snap?
Well, the social media market as a whole is expected to keep growing. That's a big opportunity. And the demand for short-form video and AR experiences, that plays right into their strengths. There's a chance they could benefit if users start moving away from competitors who are facing regulatory issues. And they could also expand their reach to older demographics. And of course, there's always room to further develop and monetize their existing features and services.
And finally, what are the biggest threats facing Snap?
The competition is fierce. There are some very established, very well-funded players out there, and they need to keep an eye on the regulatory landscape because changes there could have a big impact. An economic downturn could hurt them because that would likely mean less ad spending, which is their main source of revenue. And user preferences, those are always changing. There's a risk of social media fatigue or a new platform coming along that's more appealing, and they'll need to keep investing heavily in R&D to stay competitive and in content moderation to make sure their platform is safe.
Okay, so as we wrap up our deep dive,
Right.
what are the key takeaways from our analysis of Snap?
We've seen a company with a strong brand, especially among younger users, and a leading position in AR. Their revenue is growing, they're generating positive free cash flow, and they're actively managing their debt. Those are all good things, but they still haven't figured out how to be consistently profitable, and the competition is intense. And that's why you see that mixed sentiment from analysts. There's a lot of uncertainty.
For someone who's a value investor, it seems like there are some things to like, but that profitability issue and the amount of debt, those are red flags.
Exactly. It means investors should be watching closely to see if they can achieve sustained profitability, how fast their subscription service is growing, if their return on investment is improving, and how well they're handling that debt.
And because their profitability has been so up and down, it's tough to calculate a precise intrinsic value for Snap right now. So it seems like relative valuation, comparing them to their peers in the industry, that might be a better approach for now. So for investors, what are the potential rewards here? And what are the big risks they need to be aware of?
On the upside, you've got the potential for continued strong revenue growth, successfully monetizing their AR technology and those subscription offerings, maybe gaining some market share. And of course, if they can finally crack the code on consistent profitability, that would be huge for the stock. But the risks are real. If they can't become consistently profitable, that's a big problem. The competition could get even tougher, regulations could change in a way that hurts them, that high debt load is still there, and the stock price has been volatile.
So for anyone who's following Snap, what are the key things they should be paying attention to going forward?
Definitely keep an eye on their progress towards profitability. How fast is Snapchat Plus growing? How are they handling the competition? Are there any changes in the regulatory environment? And those key financial metrics we talked about, those are important too. And how are their AR initiatives doing? And of course, what are the analysts saying? How is sentiment shifting over time?
And here's a final thought, something to think about as you go about your day. Given that Snap is so focused on young people, how sustainable is their growth model as those users get older and as artificial intelligence starts to play a bigger and bigger role in how we interact online?
That's a great question. It'll be interesting to see how things play out.
Thanks for joining us for this deep dive into Snap Inc. If you found this analysis helpful, be sure to subscribe to the Stock Analytics AI YouTube channel for more in-depth looks at the market. You can find links to all the research we talked about in the episode description. And please share your thoughts and any stock-related discussions in the comment section below.
And as always, a reminder that this was just for informational purposes. It's not investment advice. Any AI-driven analysis we presented is based on the data we had at the time of recording. Past performance is not indicative of future results. So do your own thorough research before making any investment decisions.
Until next time.
Take care.